Good morning, welcome along. Thank you for your attendance today. My name is David Opie. I work for Landmark, and just briefly to sort of fill you in, Landmark have got a fairly long-standing relationship with hunters. A little while ago we started working with hunters with the Metropix software, which some of you may well be familiar with. And more recently, we've been delivering electronic anti-money laundering checks to the business, and we're actually now in the process of rolling that out across the group-owned branches. And the purpose of today's presentation is to provide some context to that decision, and also for other people's benefit to provide an update on the changes to the money laundering regulations which came into effect in June. So the first place I wanted to start today, and this is sort of hopefully probably going to cover ground that people are aware of, but just thought it'd be worth reviewing, is the reasoning behind the compliance activity that agents undertake. HMRC, who regulate AML compliance for estate agents, have now released interim guidance to help you deal with the existing regulations, and also to get an understanding of what the implications of the changes are. The guidance is still to be finalised, but it does provide some useful pointers for us when it comes to the compliance activity. But the statistics from government are stark. It's estimated that about £100 billion is laundered through the UK property market every year. The sector is under scrutiny, particularly after the National Crime Agency reported that just 355 suspicious activity reports were submitted by estate agents in 2015, despite there being well over 1 million property transactions. Many of you might have seen From Russia with Cash, the expose a little while ago, which brought the issue to the wider public's attention. The intended aim of the regulations is to prevent the use of illegally obtained funds or terrorist financing from being legitimised through the sale and purchase of property. I think we can all be guilty of being focused on collecting ID and utility bills and verified documentation and that sort of thing. But customer due diligence, which is what we apply to all of our customers, is a process. And that process is where you use the tools at your disposal to risk assess your prospective clients and come to a decision about whether you are prepared to enter into a business relationship with them. This is also known as Know Your Customer, KYC, and it involves understanding more about the individual and the nature of the transaction to come to a risk-based assessment. I think for the most part this has been traditionally achieved by collecting paper, whether that be driving licenses or passports or utility bills, but more recently the property sector has followed financial services and insurance and made use of electronic checks to help with client verification. That final point is critical. No illegal funds need to pass through the business. In order for agents to be culpable, HMRC are looking for documented policies and procedures that steer staff toward an appropriate risk-based decision when it comes to taking on new clients. So the changes to the regulations, known as the 4th Money Laundering Directive, came into effect on the 26th of June of this year. And there are two key changes that that you sort of need to be aware of. The first, I think most of us are aware now, is the need to undertake customer due diligence on buyers in addition to your sellers. Now importantly and perhaps reassuringly, this is not anything over and above what you've been doing since the start of the regulations. Rather, it's an extension of your existing checks to your purchasers. Second is the requirement to identify and apply enhanced due diligence to UK politically exposed persons, or PEPS. Now we'll cover PEPS in quite a bit of detail today because I think that's an area that people are a little bit concerned about. But there's guidance from both HMRC and the Financial Conduct Authority as well that we're going to have a look at on how we can identify PEPs and then what sort of enhanced due diligence and typical behaviours we can implement. Just that final point at the bottom, this does come up from time to time, so well worth covering quickly. You need to apply customer due diligence, or CDD, to beneficial owners of companies where you're dealing with those, so that's people with 25% or more interest in the business. And in probate cases, you need to apply CDD to the executors of the will. As we go through the presentation, where I quote directly from guidance, I've highlighted the word risk deliberately to bring your attention to the focus the regulations place on understanding the risk to the business and taking a risk-based approach to your compliance. So what do HMRC say we need to do to comply with their requirements when it comes to applying customer due diligence? The list here is taken directly from the regulations, and as I said, almost certainly covers much of what you guys are currently doing. You must, for example, verify that an individual selling a property is legally entitled to do so. You must apply enhanced due diligence when you identify a greater risk. So, for example, if the customer is not physically present or when dealing with a PEP. You can refuse to deal with persons and should indeed refuse to deal with persons or entities if you cannot verify their legitimacy.
And you must have a system in place for keeping copies of customer due diligence.
Where you are applying customer due diligence to your vendors, you must ensure it is complete prior to entering into the business relationship, so before you list the property. And the guidance says that for purchasers, a business relationship becomes effective when the buyer's offer is accepted and the other party's identity must be verified before contracts are exchanged. So there's the timing. Electronic checks can be used to apply customer due diligence, and one of the benefits of them is that in most cases it actually negates the need to collect paper ID. So when do we apply enhanced due diligence? Again, this is taken from HMRC's guidelines, and this will be largely down to your own view of risk, but we've got some indicative behaviours here as a guide. Essentially, enhanced due diligence is applicable when the risk associated with the individual or individuals is greater than sort of a standard risk. It should be said that this list is not exhaustive. So, for example, it talks about people in high-risk areas such as London, and interestingly, we had a client in the Lake District who was inspected recently because HMRC deemed that property in the lakes are high value, for one, and there are also a high proportion of second homes where you often get cash buyers. Some other examples that we've come across we could add to this list: if there's an unusual or unnecessary haste in the transaction, that's sort of a red flag, and also we're just going to be a little bit careful about the use of unknown or unusual solicitors, I think, as well. You know, that should be another thing that we need to look at. There are other sort of transactional red flags that should put you on alert to high-risk transactions. Again, from HMRC, these will not only include your purchasers wandering into your office with suitcases full of cash, but if you look at point 3 here, it's important to note that a person who is not physically present will constitute a high risk, and you'll need to apply enhanced due diligence in those cases. So for buyers, for example, where we're not meeting them, we need to ensure that we're applying enhanced due diligence. I think it's important to say that they're not hard and fast rules, or indeed, for example, you know, any one of these are not evidence of illegal activity, but they're red flags that should alert you to the need to apply enhanced due diligence. And staff should be trained on identifying potential high-risk scenarios in order to be able to make a decision on whether to apply enhanced due diligence or not. Where enhanced due diligence is appropriate, you will need to evidence your activity. That's very critical and something HMRC are very hot on. Typically, this will include over and above your standard customer due diligence, whether you continue to do that by paper or whether you're going to do that electronically. obtain additional evidence of the individual or individuals you're dealing with to establish the identity. So there we're talking about maybe passports or driving licenses. Interestingly, verification of documentation provided, so whether that's verified documents from solicitors or indeed electronic checks can be used to verify the legitimacy of documentation. And further clarity on the nature of the transaction, and this list actually includes source of funds. So where electronic checks are being used, you can set the level of check to high risk. As I said, we can verify the legitimacy of the documentation. And in doing so, we are, point 2 there, taking additional measures to verify the documentation that we've been supplied with. Another good example of enhanced due diligence is obtaining the title from Land Registry to verify the ownership of the property, because the owners are listed on the title. Another good tip I was given not so long ago is to have, and bear with me with this one, your remote clients take a selfie with their ID. I've talked to a few people about this. In this way, you verify that the person in the selfie is the same as the person in the photo on the ID, and because you can run the ID number through this electronic check, you can verify the legitimacy of that document, so you can check it's not a forgery. That's a sort of a bit of a whistle-stop tour over customer due diligence and enhanced due diligence. And if anybody's got any queries on that, then please by all means come back to us. But I'm going to move on to politically exposed persons, which I think is one of the biggest challenges that faces estate agents as a result of these changes. The fourth Money Laundering Directive extended the requirement for PEPS to the verification of UK PEPS. So previously it was just foreign PEPS. Now it's UK politically exposed persons. Now it's important to say that unless your enhanced due diligence says otherwise, you can enter into a business relationship with a PEP, provided that you undertake enhanced due diligence and you obtain senior management approval to do so. And you can see there that the guidance from the FCA highlights this whole risk assessment and this risk approach again within their wording. And the interim guidance from HMRC does outline who we might consider being a politically exposed person. I think this is a really useful indicator of how we can identify people, and more importantly who HMRC regard as being a PEP. So for example, it talks about members of Parliament or similar legislative bodies being PEPs, members of the governing bodies of political parties, judges, ambassadors, high-ranking officials in the army. It also extends to family members as well, and known close associates. So you do have to be very, very careful when you're dealing with PEPs to verify some of this information. But there is an acknowledgement from HMRC that UK PEPs will present much less of a risk from a money laundering point of view than foreign PEPs, and therefore enhanced due diligence can be applied, but at a sort of a slightly reduced level. And we'll have a quick look at some examples of that from the FCA. What measures could you take in such circumstances? You don't need to make inquiries of PEPs family or known associates. It says take a less intrusive and less exhaustive steps to establish a source of wealth and funds, and importantly, the approval of the relationship can take place at a less senior level than that of a board director. So we might, for example, apply the same level of enhanced due diligence to a UK PEP that we might with a remote client, somebody that we don't meet, for example. But note again that the word risk appears several times in relation to understanding the nature of the business relationship and then applying an appropriate level of check. When we look at the criteria here relating to high-risk PEPs, particularly foreign PEPs, we can understand why UK PEPs can be treated as lower risk, although don't forget that enhanced due diligence still applies. It might be a little bit flippant to say, but we can read down that list and consider that some of these things could be applicable to the UK, but I think the reality is we're talking about countries where these things are rampant. And again, the FCA have sort of given us a little bit of guidance on what application of enhanced due diligence we should be applying, including, to quote there, the top line, intrusive and exhaustive steps to establish the source of wealth and source of funds. Now that's a really challenging one for us, but the approval and oversight of the business relationship is absolutely resides with senior management and at board level. I think in most cases, and your experiences will probably bear this out, we would anticipate that if you're dealing with PEPS, then you're likely to be dealing for the most part with UK PEPS, in which case your enhanced due diligence that we apply to remote clients is going to be sufficient. But as ever with these sorts of risks, the vast majority of your clients are likely to be ordinary people who are simply looking to move, relocate, upsize, downsize, and who are not going to present a risk to your business from a money laundering perspective. The key objective of the regulations and the money laundering regime is to have firms document and evidence their approach and activity when it comes to their money laundering compliance. I think ultimately, and I go back to the point that on that higher risk PEPS where it said about doing exhaustive checks on source of funds, ultimately you as estate agents can only do what can be reasonably expected of you. You're not solicitors, so there's no expectation to undertaking thorough checks on bank accounts. There's no real expectation on you to understand financial paper trails. It's not a speciality skill set for the sector. And as such, you cannot be expected to go to that sort of level of detail. What I would say is that electronic checks give you the opportunity to apply a consistent approach to customer due diligence, particularly when it comes to clients that you meet and clients that you don't meet. And they provide a complete time and date stamped audit trail for the business, which, going back to the requirement under customer due diligence, is to document and evidence your activity. I'll just very briefly show you a couple of the results that we get back. This is a pass result. The big green tick in the corner. We've got the green writing to the left-hand side that says that the online verification system suggests that the client is not on the politically exposed persons list or sanctions list. So we're looking to help you to identify those individuals. This is a refer, sort of a big red box in the top right. This person may be a politically exposed person, and it says to refer it to the manager. Now, we as a business provide dedicated client support for all of our customers, and what we would do is we'd review the result with you, and we'd help you to sort of identify relevant next steps to complete your customer due diligence. The checks will in most cases negate the need for you to collect paper ID, and because they check a range of positive and negative databases, you can be confident in the results. And as I said, they'll also identify whether you're dealing or potentially dealing with a politically exposed person. The regulations talk about the fact that you need to retain your checks for 5 years. We retain all of these checks indefinitely, so that they're all there, free access to them for audit purposes. I've just been asked to finish by mentioning that Hunters have recently updated their money laundering policy, which is available in the members area in the Hunters Operations Manual under Company Policies, and you are encouraged to review this as soon as possible. That's it. Thank you very much indeed for your attention. I hope you found this to be useful. Thank you very much indeed for your attention. If you do have any queries, or indeed you're interested in finding out a little bit more about how we can help you with your business, then please don't hesitate to contact us using the contact details below, and hopefully we'll speak again soon. Thank you very much indeed.